All right, well, it's 11 o'clock and we have an appointment at 11 o'clock, so let's go ahead and get started. We're going to be talking about a couple different things today, and this session used to just be called Reducing Property Taxes. It's now called what? Take your taxes down and bring your leads up. Thank you. Bring your leads up. That's exactly it. So what we want to talk about is not only, we're always asking how can we give more value to our clients, right? That's what we need to do. That is our purpose in real estate. I'm going to share the story in a little bit about how I got a check for a seller for $7,500 by discussing what we did today. Is that value? Yes. Yeah. Did he want to reduce my commission? No, it's kind of hard, right? And I did this actually, it was an expired listing that I took care of, and I offered that to him even prior to actually taking the listing. That was a value proposition. I knew that it would take a very small amount of time, and I could prove my value pretty easily doing that. So we'll share a couple different things, but first off, I want to show an exact example. I always talk about we should show and not tell our clients, right? Showing a check for $7,000 is much more valuable than just saying $7,000. So who knows the approximate number we could use from a purchase price to a yearly tax amount? 3 to 4%. Depending on the price range, I think that's a fair number. The lower the price range you get, when I'm talking like 50,000 and below, it goes up drastically on a percentage basis. Why? Because simply there are things that are going to be fees on your taxes that are straight up charges like assessments. If you street light assessment, a sewer assessment, that's going to throw your adjustment off. $300 on a lower tax bill is much different percentage wise than it would be on a $500,000 home. It really doesn't affect a $500,000 home percentage wise. So again, we're going to use 3% for a normal basis here. So I want everyone to write this address down. You can look up this house. This is one I bought years ago, 1500 East 204 in Euclid. Doing well. That house was, I would say, well, Ryan's in the room. Ryan knows Euclid. Ryan, what do you think a house on 204, a duplex on 204 is worth?
Right now, around 90, 110.
Probably about 110 to 100, even possibly 30. One of the neighboring homes over there sold for about 130 recently. But yeah, you could find one that's a little bit beat up, I'm sure, for a little bit sub 100. So let's value this even at 120. What would be 3% of 120,000, or even 4% because we're a little bit lower? What's that?
36.
So 3,600 is the what, Marty?
3%.
Correct. We know that. What is that? The tax, right? That's how much per year you're going to pay in taxes. When I was 19 and I was buying my first house, I didn't realize you paid taxes every half. I thought you paid taxes on April 15th for real estate. Lesson learned.
They didn't teach you that in high school. Huh?
They didn't. Surprisingly enough, they didn't. I learned really quickly though when I got a bill. So that's what that is. That's part of ownership of a property. So one of our jobs as real estate investors is to reduce our taxes as much as possible. So I started looking into this and how I could do it. So if I'm looking at a property, I'm profiting more if I can reduce the taxes, right? Pretty simple to understand that. So I'll show you, let me mirror my screen of what the taxes were. They were actually lower than this, but I'm going to pull up last year's bill before we had the adjustment. So if you scroll down to the bill, the entire yearly bill was $634. The reason I was able to do that was argue what we call arm's length, and I'll go over it in detail. Is that a big difference when I'm writing a check for every half, $300 and some versus $1,500? It's a huge deal. Every time I write those checks, I'm thanking the person that helped me learn how to do this, because even one deal that's significant, but when you have 10, 15, 20 plus properties, you're really excited that the amounts are so low. Now, I do want to be very clear on this, that years ago when we first did this session, I had an agent come And they felt like they were almost, in my opinion, cheated for coming to this class because they were like, well, Eric, I own this house, and we ran the example for them. And I said, I cannot reduce your taxes. Your house is worth more today than what your tax valuation is. There's nothing I can do to help you. She's like, well, this was all worthless. That may be you today. That's okay. But I'm going to show you how to find the examples of where we can find these properties and really reach out to these owners and save them money. It's a great way to, again, show that. But I'm so familiar. I've probably done now 150, maybe even 200 plus of these submissions. And I can predict exactly within about 5 to 10 minutes where that outcome is going to be at the Board of Revision, the Court of Common Pleas, the 8th District, Supreme Court. I've been through all of these. I can predict exactly which ones are going to rule and why. So we're going to go into those details. So I start off with a story that I had from a local individual that's a large business owner. Owns a landscaping company, probably has 200 to 300 employees. And we were eating lunch after actually one of these Board of Revision hearings, and he goes, Eric, it's pretty impressive how you can predict these. And he goes, it's like I say in business all the time, show me the rules and I'll find a way through. Show me the rules and I'll find a way through. And my aha in that moment was, wow, I better know all the rules to whatever I'm getting involved with, not just in Board of Revision, but I need to know the rules so I know what I can and cannot do. So the way I learned this was I did a lot of research. You can look up what's called case law. Case law is actually rulings from different courts that you can actually pull up. You go to Google Scholar. If you ever go to Google Scholar, that's going to be your more or less law library that you can type in and look up different case law. And what I did is I did a bunch of research and saying, okay, if this was submitted, it failed. If this was submitted, it failed. If this was submitted, it won. Or this is, they'll explain too in the case law why it won or didn't win. Now, are we allowed to give legal advice?
No.
Absolutely not. So we have to be very careful about any of this. What I am giving you is the ammunition that you can give your client to submit to the Board of Revision. We can give them the websites they can go to. We cannot say, I know this, therefore this is going to be what's going to be the outcome of this, right? I will share that information with you, but we are not giving legal advice. It's very important. If you are giving any of this information out, I recommend you do it by email. And you also say, if you have questions on anything on how to fill this out, you need to contact your attorney. But I'm not here to advise anything besides I can give advice of what I think the house is worth. We can do that, but we can't give, again, legal advice. So here you talk about how property taxes are calculated. All right, so how and when do I reduce property taxes? Really important. There's a reason why we wait until this time of year to do this class. Who knows what dates we're allowed to argue property taxes in the state of Ohio? January 1st through March 31st. That means on April 1st, you are done. You cannot submit. They actually have a time clock on Cuyahoga's website that will actually count down the amount of time. Do not wait until 5 p.m. because sometimes on years it's been 5 o'clock, some years have been midnight. I would highly recommend. I've had agents call me and go, I can't submit this. I was told through March 31st. Don't wait until 6 p.m. Do it well ahead. Do it tomorrow if you need. It takes about 5 minutes to do. So how and when can I? We already figured out the when. We're going to talk about how here momentarily. At the end of the day, though, there are two, actually I wrote down 3 ways that we can do this. The first way is we argue what's called an arm's length transaction. Arm's length transaction. You can write this next to arm's length transaction. It must be generally in the open market. Is a for sale by owner, I want you to think carefully before you answer, is a for sale by owner generally in the open market? It is. I know that's, a lot of us are like, no, they're not. They're not actually on the market. According to the Ohio Supreme Court, that's the way they rule. So it has to generally take place on the open market. Number 2, it has to be negotiated. Both you don't have to write this down, but both parties have to be pulling on their side of the rope as hard as possible. Meaning if Nancy's very nice and just wants to go ahead and gift me a house or give me it at a crazy reduced price, because, you know, we have a long-standing relationship through the office and we weren't negotiating. She said, I want this out of here, Eric. I'll give it to you for $100,000 and it's a $200,000 property. Was that openly on the market and negotiated? It was not. So that means it would not qualify for an arm's length transaction. Number three kind of goes with number two, is you cannot have a relationship between buyer and seller. Now, what the definition of a relationship is, I don't know if it's brother-in-law or second cousin or fifth cousin. I'm sure there's a line drawn somewhere, but you can't have a relationship with the, could even be potentially a business relationship. I don't know. And that's really what we have to talk about for, well, let's actually put a couple other exclusions here. It cannot be a HUD property. It cannot be a property that you purchased from VA. You can get a VA loan, but you cannot purchase it from VA. You cannot purchase it at a sheriff sale. This makes no sense on why they ruled this way, but I can tell you this is the way it works. So your formula in your head, if you hear any of these items, it's an automatic exclusion out of an arm's length transaction sale. Things that do qualify that seem like they shouldn't, if those don't, bank-owned properties do qualify. What's the difference between HUD and bank-owned? I don't know. And am I related to HUD? No. There's been arguments that have actually been won at lower courts and then overturned in the Supreme Court that the lower courts were like, no, there's nobody's forcing HUD to sell a property. They are the federal government. Nobody's forcing them to do anything. I don't know how they could rule that way, but again, the Supreme Court overturned it for some reason. Short sales do qualify. For sale by owners, we already talked about do qualify. If a property's been listed for an hour, that does qualify. It is an openly marketed property. Like,
Say, for example, if, I'll give you one of my examples, if an agent in this office had a off-market
Sure.
property, one that they had a listing agreement signed, but never hit the MLS, and I purchased it, would that qualify?
I believe yes, because it was openly marketed. You had, it sounds like you have filters on both sides of it.
Yes.
You were both pulling on your side of the road as hard as possible.
Correct.
And there wasn't like gifted to you or something like that.
It just was, it never hit the MLS. So
Yeah, that's not a problem. Yeah. During the testimony, I'm not giving legal advice. I would say that, you know, here's how the negotiations went. You know, I need to prove those 3 points that I just made, that I didn't know the person. This is how I found out about it. Another realtor reached out to me, and you go from there. We'll talk about how the hearing goes here momentarily. Has anybody not signed in? Raise your hand. All right, we'll keep moving this around and we'll get your signatures here momentarily.
It's okay, John, you can leave it. I got them.
Okay.
We're all
Thank you, Carrie. So again, that is our number one way that we can argue arm's length. Lastly, it has to be done within 2 years of the tax lien date. Really important that we understand what a tax lien date, 2 years plus or minus. So that can be after the tax lien date. You can actually have a sale and still argue it that it was close to the tax lien date. So your next question should be, well, Eric, what is the tax lien date? There is a tax lien date every single year, and that is January 1st of fill in the blank, 2021, 2022. Right now, what year are we arguing if I argue something today? We are arguing 2021. Correct, we're in 2022. So yeah, it's always a year in arrears. So I am looking at plus or minus 2 years, January 1st, 2021. Now, I will tell you, if I'm on December 31st, I have a transaction happen at December 31st. And by the way, do we have transactions happen on December 31st occasionally? Yes, that can happen December 30th. It is outside of those 2 years. The Board of Revision will cancel it. They'll say your arm's length is gone. That will not work. It is 1 day out of the guideline. That is it. So we're going to talk about how they're very, very tight with their numbers. It's almost like we did a HUD deal when we had to write them in person, like handwrite them. You remember, if you did not fill it out with blue ink, if you had a comma in the wrong spot, if you had road, spelled out instead of RD, the way it was listed, like they would cancel the contract. It was nuts. The Board of Revision's the same way. And more importantly, the BTA, which is what we're going to talk about if you have to appeal it, which very often you do. They're getting much better, but often we lose at the Board of Revision level, and we'll talk about why that is. We appeal it to what's called the BTA. You don't have to write notes about that. We'll go more into detail shortly. So the second option that we have, if we're not doing arm's length, is going to be an appraisal. That does not mean a very fancy CMA that we do. That is a true appraisal done by an appraiser. I'm going to give you a couple of things that have to happen. The first thing I would do is make sure it's an appraiser that has gone to the Board of Revision. We don't want an appraiser that is your friend that does appraisals for commercial properties and it's never gone to the Board of Revision, because there are certain things that have to be in that appraisal, or again, it's automatically canceled, even though that appraisal could be identical to another one. But again, a couple of things here that we need. Effective date on it, not when they did the appraisal, but there's an effective date for every appraisal. If you look on your appraisal, that means when the appraisal was good for. Appraisals are good for 1 day and 1 day only. The effective date has to be the tax lien date. So if they mix up and put January 2nd instead of January 1st of whatever that tax year is, it's an automatic exclusion. You lose. Very silly, because how much does a property change in value from January 1st to January 2nd? It's not possible to be proven, right? So if it's in the same condition, it doesn't make a difference, but I'm just telling you what the rules are. Secondly, the appraisal has to be done for tax purposes. There's on every appraisal you do or you get, there are reasons why it's on there. It could be a refinance, it could be a new purchase, it could say for estate purposes. It has to say for taxes. Lastly, the third part is going to be that appraiser must appear and testify at the hearing. One thing that's been nice about hearings, you have to go downtown anymore for them. They're all on Zoom, last I heard. Doesn't sound like a big deal, but especially in Cuyahoga County, go try and park near the Cleveland Indians Living Guardian Stadium and park, and then walk across the street and wait while everybody's there. All you're doing is setting up your Zoom camera. The appraisers are a lot easier that way too, because now they're not driving all the way downtown. They're usually not even charging for that. I would guess an appraisal should cost you $200 to $400. Now, the other thing that I do is when I talk to the appraiser, I'm asking him ahead of time, hey, John, I'm going to have you come over and do this appraisal for me. Before we do this, I'm seeing that the value online is $140,000. Obviously, we're looking for a number lower than that. Can you pull some comps real quick and look through your computer and see if that's even possible? If John comes back and goes, Eric, I can get you 135, am I going to pay $200 for that? What's that number you want, right? Because remember, we're saving whatever 3% of that number is. So if he's reducing it by 30 grand, now we're talking. And how long does that last? Depending on the rotation, up to three or even 6 years. So we're going to talk about that momentarily, because this is a bigger session this year, because we had our reappraisal done. Everybody got those letters back in like October last year, and we're panicking about this. So option number 3, which oddly enough has worked at the Board of Revision level only, that's beg for help. I've watched it work. You go in there and you say, look, my neighbor sold for this. I don't think my house is worth this. And somehow or another, the Board of Revision is now starting to listen to those individuals and say, yeah, I kind of agree with you. They're doing that out of the goodness of their heart. They're not doing that for any other reason. BTA would not take that as anything. They would literally just like reject the evidence and say, you've lost, move on. So at the Board of Revision level, though, my point being is we can't use number 1 of an arm's length transaction, and you can't use an appraisal. You could go in there and beg for help. You might get something there. So I have no idea of what the likelihood of it is going to be working for you. So something you could do, though. Before we move forward here, it's important that everyone understands the challenge that we have this upcoming year. There's a rotation of every 3 years. They're called triennium. Right now we are 2021. So that would be 20 and 19 all gathered together in triennium. This was a reappraisal year. Then we have the next set, which is 22, 23, and 24. This is what we call a revaluation year. So we just hit our revaluation year for, let me rephrase this, actually, this is wrong. 2021. No. This is 18, 19, this is 2020, 21, 22. So our reappraisal is where in 2018, so actually that came out in 2019. So like around October of 2018, they said we're certifying values for January 1st, 2018, and we are wiping the slate clean, they claim. They actually don't do that, but they do kind of. The number that you were at previously will affect your future number. That is a factor, an element of what they're using. It is not going to be though like a real, people go, are they going to be walking around my backyard and things like that? They're not doing that type of an appraisal. There's an appraiser sitting behind a computer for every parcel. You know, yeah, it's a 3-bedroom, whatever, bad. It probably auto calculates something like Zillow does, and then they go, yeah, we probably need to adjust this up or adjust it down. But they have no idea what the condition of your home is. They can see permits, right? So they can look through the county and go, geez, this person added on a 3rd floor. They put on a 2-car garage. They did whatever. They can see those things and that can affect it. But I bet you, on average, they're probably spending 10 seconds of property going through these. I mean, there's no way you can value, this group of investors or appraisers can value the entire county. So that's what's a reappraisal year. These are the years that you really have to watch out for because we have massive jumps. And by the way, we have a massive jump in 2018 compared to our last triennium, which would have been 6 years prior. That would have been 2012. The values changed between 2012 and 2018. A huge amount. If you remember, when we did this session for 2018, people were like freaking out. There were news stories that people's taxes in Lakewood were going from like, they were like quadruple. They're going from $1,500 to $8,000, $9,000. It was nuts. And the bigger challenge, and this is why I bring this up, that it's really important when we have these bigger years, reevaluation or reappraisal. The big problem that you can have is, let's say that person in Lakewood ignores their mail. They get all these notices and the Board of Revision will put them on notice. How does that affect their monthly payment? Will it affect their monthly payment if taxes go up? It definitely does. But if they're ignoring that, do the banks know that that number is changing? They don't until they do an escrow review. Every bank typically does an escrow review once a year. Let's say you're on that rotation that you don't catch that that your bank doesn't catch it till like November or December of that year. Guess what happens to your monthly payment when your $1,500 a year, which is about $100 a month, goes up to $8,000 a year? Now they're back charging you for all the missed numbers, plus you already, if they would have even caught it up front, it would have gone up. Now you're making up for back numbers and future numbers. So you have to be very careful. And this is where you could be of extreme value, even though, back to that example, you're much more valuable to the person at the beginning of 2018 than you are at the end of 2018. Now they have a big hole that they are mixed up in, where before it's not that big of a deal when it's only adding $200 a month on their monthly payment versus $600 a month. I had, and don't always trust the escrow numbers either. It's automatically computer calculated. In my old house, I'll never forget, I got a statement. My old mortgage was $1,200 a month. My next bill when they did the reevaluation was $40,000 for a monthly payment. That obviously was wrong. What happened was there was a sewer assessment that showed in a category on the auditor site that there was a $40,000 sewer assessment, and they just decided to put that in for first month, which was kind, even though it was put over 5 years. So don't trust those escrow numbers. If you are wise, we should have Sean do it sometime, actually figure out how to calculate an escrow number, right? It's a lot more difficult than just dividing it by 12. That's your taxes and insurance divided by 12. There's a little bit more into it than figuring just that out, especially when taxes and insurance are paid at different times of the year. And then there's a minimum balance that they want in that escrow account at all times. It's important that we know that. That way, when we get calls from our clients, we can actually calculate it back to them. I had a client do that years ago, and I actually did the numbers and I said, here's probably what your bank had. And I calculated down to the penny exactly. He goes, yep, that's exactly what it's at. And I said, this is where it should be. Their computer system didn't catch whatever this item was. I can't remember. It was a couple of years ago. But we should be able to, as real estate agents, calculate that. And I know that that's a little bit more of an advanced item, yet it can be very valuable to a client. So, long story short, make sure, or I should say to summarize, make sure that you're talking to your clients. If your taxes went up, we should all be posting this on Facebook, sending out emails. If your taxes went up, we should reanalyze your escrow balance to make sure you're not caught behind the 8 ball in November, December. So another way to find the excuse to call your leads, call your sphere, call your family, friends, whoever. All right. Perfect. All right, we already talked about how we should submit and how that works, and we are ahead of schedule. So I am actually going to run a real example for us today on how to do this. So let me pull up one of the properties we bought recently. And we will do this live. So here's a property that I bought, and my question is, can I reduce the taxes or not? So I would go to the transfers. You can pull this up on any property. The transfer was March 25th of last year for $98,000. Now, if we go and we look at the tax bill, we need to see the tax bill is $163,000. Do I have the ability to reduce those taxes? By how much? 163. Who can do that math? 163 minus what I say, 98?
65.
65,000. What's 3% of 65,000?
1950.
You are on top of your numbers.
What?
You are on top of your numbers. So by filing this form, you're going to see it'll take us about 5, maybe 10 minutes to do today, because we're going to take a little, I'm going to be talking you through a lot of examples. It's probably going to save $1,900, right? Is that worth an hour of my time, especially including the hearing that I'll have to go to virtually? So we'll talk about the hearing momentarily. Let's go ahead and pull up. Now that we've spotted a property, we can now go to, I'm acting like you guys can see what I'm doing. Let me put this up here. Before we move forward, does anybody have any questions? I want to make sure this can, I know it's like, we can get into the weeds on this stuff.
Oh, there. I had a question. Your house that you bought when you were 19,
Uh-huh.
what did you pay for that?
$14,100. It was one trend. Probably worth about $60,000 today. I've probably made in rent income, whatever, $400 times 12 times that many years. Probably $50,000 to $80,000. So, absolutely. All right, so I'm just Googling border revision Cuyahoga County. Go to their website, and there's usually an e-file. So there's a couple different forms. There's a couple different ways to do this. You can do this either in person by having a notarized form, which is called a 1098 form. I'll show you what that form is. It's a blank form. This is how we used to do every single one of them. This form changed slightly, but this is a state of Ohio form that if you go to Geauga County, Lake, Summit, whatever you go to, it's generally going to look like this. It's a state form that somewhere on here, I'm sorry, 1098, this is a DTE form 1. 1098 is what you get from your bank. Your DTE form 1 is what we're looking for, which is up here. You can do multiple parcels on here. I would recommend against that. I want one document per filing. That's the way I like to do it. The Board of Revision appreciates that as well. When we've had it where we've gone in with like 50 properties. Being very organized is obviously very important because you're gonna pull up parcel numbers. Everything is organized by parcel numbers, not by addresses. So you need to have everything in line that when they say parcel ending in 342, you can just jump right to it and pull that open. All right. So I'm not going to fill this out in person. I'm going to e-file it online. Now, one other caution, they actually allow you on here on December 28th of 2021 to file. For some reason, Cuyahoga has been doing that. The Supreme Court has rejected those filings before, though. We need to make sure that I would wait until January 1st to do it. All right, so we're going to start here. We're going to pull up my parcel number, which I already had open. 661170076. 66117. 076. Now this should pull up all. It should be copied. 661170076. One second. Frustrating that if there we go. So it'll pull up and confirm, especially if you forget the parcel number. You can confirm it right here. Yes, that is the property. 320 Royal Oak. You just click save and continue. What's nice is all of these things that you would have to fill in and look up on the auditor site, it fills in for you. That's why I recommend highly you just do this. Now at the end too, you can print this if you do want the printed copy, and you can go file it with a notary. If you want, I would still recommend you just go this direction. All right, one big mistake. I know that I'm a realtor. I am not, well, this one's in my wife's name. I am not her realtor. This is not what they're asking for, an agent. This is more of like if you are filing on behalf of someone. And are we filing on behalf of someone as realtors? We are not doing that. If you have an attorney, they would put their name here. So we're gonna leave that blank. We are leaving, it's trying to autofill for me. Again, you can print, if you're printing it, then that's where you put that. Email address, you put in your email address. Be careful because this one put me in as the agent. I love Apple and don't appreciate them for that. That's interesting. It's not letting me get my name from there. All right, want me to verify. All right, now here's my opinion of my market value. Now, again, when you fill this in, they want a taxable assessed value. Why the county does this? The assessed value is always just 35% of the value. We don't have to know this if we're filling it online because it will auto calculate for us. All I have to do is say what I think the house is worth. What do I think that house is worth, by the way?
98,000.
That's exactly it, 98,000. Don't put 9.8 million. 980,000. All right, so change in value, $65,900. Well, it already calculated for me. Sometimes you do have to click this depending on what browser you're on. Click next. Reason for change in value. I'm just simply writing arms. Arm's length transaction. Now, have there been any improvements or anything sold? Now, I'm sorry, was the property sold in the last 3 years? Yes, it was. Now it'll ask me to put in the sale date, which I just go back here, and sale date was 3/25/21. Is that, by the way, within 2 years of the tax lien date we're arguing? January 1st, 2021, I'm within 2 years, so I'm golden on this. When you're doing transfers at the end of the year, by the way, it's often that I'll catch these and I'll go, I'm gonna wait till January 1st to file this. That can be a huge difference in tax valuation. Sometimes it makes no difference, sometimes it's a big deal. So you can evaluate it and figure it out from there. Improvement date. Now, these are going to be improvements that are going to be significant. Adding square footage would be one of those, adding an additional garage. That's what they're looking for. They're not looking for that you put on a new kitchen faucet. So you intend to present testimony or report of professional appraiser. I typically put unknown. If I never put no, I either put yes or unknown, because I want that right to be able to do that in the future. Now, here's something else we have to be aware of. These boxes down here, a lot of us get check happy here and click happy, and especially realtors, they just go to the answer and go, was the property sold in an arm's length transaction? They click yes. That is not what they're asking here. If there is a if I have filed a prior complaint to this parcel, the only reasons I'm allowed to do this within these trienniums for a second time is if one of these things happen. So let's say the seller of that house argued what the tax valuation was and lost. It was an arm's length transaction. We did not know the seller. We negotiated, so on and so forth. Therefore, I would then go ahead and check this box, but he has not filed that. Property lost value to casualty, a substantial improvement was added to the property. And that would be if you wanted to raise your taxes. I remember hearing Frank Russo years ago at an investor meetup. If you don't know who Frank Russo is, check the news articles by Googling him. It's a corrupt auditor at Cleveland, and he goes, whoever wants, we're happy to raise your valuations. I know a lot of you think your house is worth more than what we're reporting. If you want us to report it higher, we're happy to do that. The challenge is now you're just paying higher property taxes. Anyways, property occupancy changed by at least 15%. That's mainly, in my opinion, more for commercial. It's kind of hard to do a single family and have occupancy change by 15%. But yeah, typically, actually, I shouldn't say typically, I think every single time I've always had those left blank. So this is important too. This is the email address you're going to be submitting the evidence to. If you do not receive an email, the complaint was not submitted. So we click next. This is just a kind of a quick review. I have my right mailing address on there. Actually, I'm going to put in autofill, not put in. See if there's anything else. Opinion of value change. You do, by the way, if you don't see parentheses in here, meaning parentheses, any number in a parenthesis means what? It's a negative number. If you see a positive number, you might want to think twice about clicking next. I believe I declare that all penalties of perjury, I'm being honest. Very important. You're going to be under testimony, sworn testimony, when you verify all of this information from the board. Make sure everything is correct on here. And I have successfully filed it. Now, I'm not going to go into the details. We can go back into how we can find these searches and actually see if our evidence was uploaded. When you submit your evidence, you are now going to be sending to that email that we saw. It's BOR info. It's on their website here somewhere. BORinfo@cuyahogacounty.us. For each property, you want a separate email. Type in your parcel number only at the top. And then in the email, I would put evidence for this parcel and then attach your evidence to it. All right, so let's go back to what do we submit now that we're done. We're going to be submitting a couple of different things. First off, for arm's length transaction, we're going to do well, we already did what we submit for an appraisal, right? No questions on that, I assume. So now we have arm's length transactions. What are we actually going to be submitting for evidence. Number one, we want to submit the purchase agreement. Now, if you're doing some kind of odd deal, which is rare in the business, but I've seen it happen. Let's say you're your buyer's offering on a property, but they're assuming a loan. That would not, I think that could also exclude you from the arm's length argument, right? Especially if you're being compensated, right? Let's say you're assuming a loan for 50 grand and you're buying a house for 10 grand that's worth 70. Your purchase price is going to show 10 grand, yet you're assuming a loan for 60. So it's important that you bring that up at the board of revision at that moment. And typically that gets excluded from that column completely. Now you have to go in with an appraisal because they're not just going to say, well, we'll add up 60 and 10. It's not how it works, unfortunately. What else? So yeah, we want our purchase agreement settlement statement, either HUD or Alta. HUD still exists on cash deals.
I have a question about cash deals. I know earlier you were talking about with loans and everything if you're buying a house, but is it harder to map this if you buy something cash? Is there no like appraisal that came with that purchase agreement?
No, that's a great question because often I hear from buyers and through this session, someone goes, well, Eric, an appraisal came through. Let's say I bought a house on the open market. This is rare today. I bought a house for $200,000. The appraisal came in at $275,000. It was in disrepair. It needed a ton of work, right? But whatever, the appraiser still thought it was worth $275,000. The auditor valued it at, let's just for the sake of conversation, say $275,000. That appraisal is only for bank purposes. I could hand that appraisal over to the board of revision and show them the purchase agreement. Which one is more important? It's the purchase agreement. They're going to say that was the real valuation of the home. We don't care what the appraiser said. Even if I gave an appraisal for $275,000 that was done by an appraiser and was done for tax purposes, so on and so forth, it still gets trumped by the actual arm's length transaction. So yeah, cash or not, it really doesn't matter, especially with the appraisal side of it. They're really looking for, was it a true arm's length sale first and foremost. By the way, if your client thinks that they're going to cheap out and they have a great appraisal that was low, which is happening quite often right now, and you're just going to give that to the board of revision, it's not going to fly. That again was not done on the effective date. That was correct. It wasn't done for all these other things that we talked about. Can I answer your question?
Yeah, I think so.
Perfect. All right. All right. We were on what other forms to submit. So we talked about a purchase agreement, settlement statement. Third one is what's called a conveyance fee form. Now, many title companies throw that out once they're done with it. So if you're wise, you should be talking to your title companies when you see that you're going to argue arm's length and asking for a copy of it. They all have it. That is just a form that they give the auditor showing what is happening and how much the purchase price was. And you know that they fill out like the recording fees and things like that. So conveyance fee form. Other evidence that can help, yet it's not absolutely necessary, is going to be time on market. You can do a market, like I used to show when I did that house on 204. It was listed for 1.5 years, and I remember they argued with me that I got it at a good deal, and I said, well, it was out there for 1.5 years. I don't know how great of a deal I had if nobody else was willing to buy it. That was the days to, believe it or not, I bought that house for $3,500. And they looked me right in the face and said, that house is worth 110. And I guarantee you back in 2010-ish, no way I could have brought even 50 grand on that house. And I said, you know, if anybody wants it in the room, I said, I'll sell it for half that price, for 50 grand, if that's what you believe. I said, I'll put that on record right now. None of them took me up on the offer. But anyways, we did end up winning through that one. But we'll talk a little bit more about how that used to work if we have time today. All right. So yeah, that's the evidence that we have to submit. So how do we handle the hearing. So the way the hearing is going to go is, if they ever do bring them back in person, we'll do that way, because if they ever do bring them back, you can go in there and know how that works. Otherwise, pretty much on Zoom, it's the same thing, just you open up your computer. You show up, you have all of your evidence. You want to make sure you have your evidence on your side. I also recommend having your laptop open, because they may try to disprove you on a couple of things. They do a couple tricks on you. Number one, they try to argue what the improvements are of the house currently. What date are we arguing? January 1st, 2021. So the house that I just showed you, my wife and I bought it in March of 21. Any improvements we did from that date forward make no difference. They need to know what the condition was when we bought it. So anything we can do to document that, and you can go on record and actually show photos if you want, like you can, I would submit those for evidence and say, here's what the house looked like, and here's why. I don't know that's needed unless there's a unique situation. It doesn't matter what photos you present. You could show a safe in the basement for $200,000 of cash that you bought it with. The arm's length is still going to trump it. So it does not matter how beautiful or anything or how terrible. It makes no difference. It's the condition of the property as of January 1st, 2021. They could argue there's a 50% rule that if you improve the house and you give testimony over 50% of what you bought it for, that also arm's length is excluded. So if you buy a house for $100,000, you put $50,000 in it, and you testify to that, and that's prior to the tax lien date, then that could be excluded as well. So you want to watch that. And we do have to testify to what we did do to the property as of January 1st, 2021. I would, though, if they push you and say, have there been any other future improvements, they're trying to gear you up for the next time, because that way they'll go back to this testimony and say, well, you said you did all these things. We know what you did in the house, and that's why we think it's worth more in the future. So yeah, that's the way it works. You go in, you sit down, you get sworn in. It's very quick, yet it can be. I've had people shaking in the room. My sister-in-law came with me one time, and she was shaking because she's never been in a courtroom setting. It's not a courtroom. You're like in the boardroom back here with 3 individuals. Sometimes they're very kind, sometimes they're not. But it can be intimidating when you're being sworn in, so be prepared for that. They'll ask you some questions. More times than not, they're very good, though. They will ask you, was it openly negotiated? Typically, they'll ask you, is it rented? Because they can try to argue a rent approach, which still does not work because arm's length still trumps it. Even an appraiser should be putting in there, if your house is rented, they should be doing a, what's the word for it? There's a market value approach for an appraisal, and there's a cost. I think cost approach is going to be if they add up all the construction costs. That's replacement. It's where it's a profitability approach, right? That they'll say that the market's producing 10% rate of returns. They'll say you're making 10% rate of return on $10,000 per year. You're making 100. That's the house is worth $100,000. I've never had them actually win at the BTA doing that, but they're going to try and overturn you at the BOR. When you get that letter back from the BOR saying you lost, you're going to feel like you lost, and a lot of people give up at that time. The BTA is super simple to jump onto if you have to. What's that? Income approach. Thank you. That's what I was looking for. So income approach is a different type of valuation that they're going to try and prove through those numbers. Yet I've never seen them succeed with it. But yeah, they're gonna ask you what the water bills are, if you've done any improvements, who's responsible for HOA fees, who's responsible for water. Questions like that, I would say it normally takes about 5 minutes once they get to you. For whatever reason, Zoom, they've been running way behind in all counties, but when they do them in person, they're usually pretty close to being on time. Yeah, make sure that you and or your appraiser you want to pick somebody that's willing to speak up, because they will try and punch holes and they'll give you comparables. Watch, they'll just randomly give you comparables, and these could be non-arm's length transactions that are refis. So when somebody refis, it gets checked in the auditor site, and they just automatically stamp on there that it was a quick claim deed. Let's even go that route. Somebody quick claims from an LLC to their personal name or vice versa. They're just going to take the auditor's valuation and say that that's what it transferred for. And they're going to say, see, that one transferred for 110, but you look at the quick claim deed, you go, well, that was a quick claim deed. Be careful, be ready to worry too much about going into the weeds with that. It's more, here are the results that you need to know. I negotiated this, I did that. Doesn't matter what comparables they throw in front of you. But don't be afraid to speak up when need be. All right, any question after that? Pretty much the hearing, just they give you a 2-week notice. They'll say we'll give you a notice in 2 weeks and go from there. We'll pause there. Any questions?
Property that's commercial and residential.
Can you do this?
Can I do this?
Absolutely. You can do this with any property in the state of Ohio. With commercial, you must have a commercial licensed appraiser come through to actually testify, but it's going to be the exact same way. So, great example. Any other questions? All right, we'll go through how long does this valuation last. I go through these cycles when I talk to my clients, and let's say I argued 2019. And let's give a realistic timeline. If I'm arguing 2019, when am I filing? January 1st through March 31st of 2020, right? So my client is right here. Now, the hearings, do you think the county moves fast? No. Any county typically takes a long time, so I might not have a hearing until November. So let's say we win that hearing. We get the result, and by the way, I just had somebody do this where they got the result and they contacted me like 8 months later. We have to follow up with the auditor because just because the board revision you won the hearing doesn't mean that your taxes have gone down. You have to call the auditor and say, look, my number changed. I don't want to see 163 in my auditor side anymore. I need to see 98. And then they'll recalculate it. By the way, when they recalculate it, who else should we contact? We have a loan on it. Our bank, we need to do an escrow analysis. You can call your bank at any time to do an escrow analysis, by the way. So we have this, and then all of a sudden we win in November, and then guess what? December, they get a letter that what happened to their taxes. Back here, we're in a revaluation year, all of a sudden taxes went back up. Now, we never talk about what a revaluation is. A revaluation is a percentage change in the valuation per pocket, I'll call it. What they do is they say 3-bedroom homes in this location have gone up 5%, 8%, 10% since the end of 2020, right? Is when they're reevaluated by. I'm sorry, actually since the beginning of the last chart when they did the reappraisal. So 3 years prior, they're going, this area went up 3%, down 6%, whatever that is. Now, it's really important that I want to push in 2020 for this 2020 number, because if I wait till November, they're gonna already have the certified values in like August. And they're gonna calculate my 2021 year off of August of 2020 when I actually won in November. And they're not gonna reset it, they're gonna tell me to refile. And now I might be out of that arm's length timeline in 2021 and I'm back to square one. I'm getting a lot of blank faces because I just said a lot of things. Do I need to rephrase that? Are you following? It's okay if you don't. We talk about it. All right, we'll keep moving forward then. You guys get lost. I know it can get a little bit confusing or getting into the weeds here, but it's important that we understand that when we have a reevaluation or reappraisal year, we're getting certified values up front as quickly as possible. How do we do that? We don't wait till March 30th to file. We file on January 1st. You saw how quick it took, 5 minutes. Do it up front. Don't wait until March 31st to do that. This year it really doesn't matter. We'll just keep, 21, 22. I'm sure I'll have a result by 2023. It'll be fine. So how long does it last? Pretty simple. It depends. This guy feels horrible because he got it for like a month, he feels like, and then it went back to here. Yet the reality is, this 2020 year, he's going to get compensated for that entire year. So they're going to give him money back and or just let him, what I call, burn it up in his next tax bill. So he'll have a credit to burn up, right? Now, if you want the money back, you have to show them the HUD. You email them the HUD statement showing who paid what, or, if it was a recent transaction. If it was not a recent transaction, then they're just going to refund you the money if you want. That's up to you if you want a refund or if you just want to let it sit there as a credit. Just make sure that you are calculating that. How much, by the way, if I win this, what did we say we're with? How much am I getting a reduction in value by? $1,900. It's the cheapest way to make $1,900. I just showed you. This is mainly to like, if you're targeting properties, it's gonna be hard this year because have prices gone up or gone down? It's gonna be hard for me to fight a lot of these values. Or back in 2010, I could like point at a map and hit any property and I would find one that I could actually produce for someone. But that doesn't mean that you can't look for your clients, especially those like unique deals where a house was an estate house or something like that. There's probably a handful of clients that you could help out tremendously by exposing them to this. So point being though, if I bought a house in January of 2020 and I fight that argument, it's only going to last for 2020. I'm only going to get refunded for 2020. Then it's going to be revalued for 2021. If I file January 1st, 2021, which would actually be January 1st, 2022 hearing, then it would last all 3 of those years.
Okay, I should have asked a question. About the reevaluation. So you're saying that they base the valuation off the percentage change per, which is what you value, what you're valued at?
So the county goes through, again, pockets, and they just say that these, a 3-bedroom house in Mayfield Heights near Som in Mayfield has gone up 10% according to their calculations. So they just like red mark all the 3-bedroom homes and all of those went 10% up.
Yeah. Okay.
Does that make sense? Yeah, great question, the difference between the reappraisal and reevaluation. Now, here's the other thing that's really big about the reappraisal year. If I win here, I could argue that that's lasting for 6 years, right? Because it's going to be a percentage change here. These numbers are ridiculous, what I saw investors do since 2008, 10, when the market was really down. By the way, back then when Russo was in play, the Board of Revision was a mess. They would treat you like a criminal if you asked for a reduction. Why does the Board of Revision not like a reduction?
That's funny.
Who is employed by the county? The person across the table, right? They are supposed to be a fair and impartial judgment of numbers, and I will say they've come a long way on that. But I can still tell you that they argue that you got a great deal on a house. And it's like, I argued an arm's length transaction. Anybody could have bought this. That is the true value. The BTA and the Supreme Court always agree with that statement as long as the facts are there. So we want to be very careful of how to understand how effective that can be. That's the other point too. I'm not just gaining, what did I say? Let's call it $2 grand a year. I'm getting $2 grand a year for 6 years if I did this in 2018. So by doing that one filing, I'm making $12,000 difference over the next 6 years of my life. That's a huge value. I keep talking about that check for $7 grand. That was just for that person's year. I can't remember what triennium that we were in and how long it lasted for, but it was a huge help. And here's the other thing. He was the current owner of that house. Do you think that reducing tax valuations and having a lower tax payment is going to increase or decrease the value of a home?
Increase.
Yet sellers argue and go, wait a second, I'm trying to sell my house for $600 and you're telling me it's worth $400. That's a crazy example, but you get my point. Eric, buyers are going to see that. How many of your buyers have ever looked at the auditor's valuation or even know what that is and said, well, the auditor only thinks that's worth $400, I'm not paying anything more, right? What they're looking at is how cheap are the taxes. The lower the taxes, the more they're willing to spend, and the more they're able to spend. They're looking at their monthly payment. Anything we can do to reduce that monthly payment, we need to do it. All right. We have 1 minute left. I'm going to cram one other quick diagram for you in here. I used to do like a whole hour session on this, but
Can we take you with us?
necessary. What's that?
Can we take you with us?
Sure.
Go to the board.
Sure. Yeah, I charge per hour. So
I'd rather give you like 3% of what you say.
great question. Actually, if you go in and testify as a witness and you are paid, they will ask you, are you being paid on a percentage? You have incentive caused bias to get that number as low as possible. So if that appraiser comes in and goes, I'll give you, to the appraiser, I'll give you 10% of the savings, they will actually exclude his appraisal. So just pay me what I calculate is going to be 3%, and we can or negotiate, no matter what it is, you're paying the X amount of dollars. But great point. Anyways, we'll make this quick because we have negative 30 seconds. So our first one that we're going to argue is going to be the order provision. That's where we always start in to the best of my knowledge, every state, but definitely the state of Ohio. Win and if you lose, you can go to two different areas. Or you are going to go to the. So you either go to the BTA or the Court of Common Pleas. Now, the Court of Common Pleas hears every case in Cuyahoga County. That's Cuyahoga County Court of Common Pleas. Once you go to the Court of Common Pleas again, you're getting handed a judge. That judge does not always do valuations of properties, right? So they're not used to what we're looking at, what an appraisal is, if it's arm's length, any of that. They're just saying, this is what I think is fair and this is how I should handle it. The Board of Tax Appeals deals with, in the entire state of Ohio, they're going to be dealing with practically the majority of their hearings are going to be over tax valuation. So they have a very predictable outcome. So if you have a very predictable outcome, you file there, it is free. The hearing is in Columbus, and if you have to have additional evidence, let's say you forgot to get the appraiser like I had one time, didn't show up the morning of. I had to appeal to the BTA, and then I had to go drive down with the appraiser to go fight it at the BTA. So we don't want to do that. We want the appraisal here. If the appraisal's here, the BTA will acknowledge it and agree with it as long as we checked off those boxes that we talked about. If you have to go above that, which I highly doubt would ever happen, it goes back to whatever your local district appellate court, which is your 8th district. And then from there, you would have your Ohio Supreme Court. I've only had one that went to the Supreme Court. It's odd that they even had a ruling there. I was actually the appealee, meaning I was the one that the state disagreed with me, or I'm sorry, the county disagreed with me. We took it to the Supreme Court. The Supreme Court overturned it and said, no, error is correct, reset it to his number. It's actually that first house we were talking about too. Oddly enough. Yeah, that's the way it goes. You're typically going to resolve 80% of the order revision level, 20% of the BTA. And again, if you have all of your evidence in at the BOR, it's even easier to file at the BTA. It takes like 10 minutes. Reach out to me, I'll help you do it. Doesn't even take 10 minutes. And it's free to do, and you don't have to show up for the hearing. Sorry, this isn't as like fun of a class as we normally have. I know it's just like a lot of like just information. Yet it's a very valuable thing when you dive deep into it. I would recommend, how do we gain leads? Go out there and go search properties that have sold over the last year. Check their purchase price against what the market value is, and call up those owners and say, hey, I don't know if you're aware of this. You can do this. Here's the website. You could link up with an attorney that you know and just say, hey, talk to this attorney. He'll charge probably $200 or $300 to help file this for you. Or if you want to do it on your own, you can do it on your own. Call the Board of Revision and ask for help. But it can be a huge help to some individuals. I would start with the lower transaction properties. Investors will love you for doing this. If you know of an investor, I would call them and ask them if they're doing this already. But I'm not kidding you. I have probably, between myself and the people I've helped, I'm talking hundreds of thousands of dollars of saved taxes that it's been able to help them with. So again, how do we at Keller Williams give more value to our clients? It's doing little things like this. There's always one more thing that we can help with. So, all right, any other questions?
Do they have to be a client that you were involved in the transaction or
No. No, you can call up anybody you want. I mean, that's why it's great for investors. Like, if you're going after an investor or a builder. I mean, that's huge to a builder. If you can start arguing property tax valuations for them. Again, not for them, but you can show them what's happening. But for an investor, you better believe, especially if they're like, hey, I'm a year out on this project, you can argue those taxes down. By the time it hits the market, guess what happens? That tax valuation is down. The monthly income that the buyer needs is way lower than what it could be. So those like bigger properties that need a lot of work, target those.
how do you calculate the reverse? So if you're involved in a transaction and they're gonna get a big tax bill eventually, how do you
Yeah.
find out to let them know when that's gonna hit, when they're gonna catch up?
So you have to figure out what that timeline is on the triennium. That's a great question. This is opposite of what I like to talk about, but it's the reality, and I do talk about this with clients. you bought a house for $250,000. I pulled up, the auditor valuation is $170,000. I don't know what the auditor is going to value it at. A lot of times they do hit that number. Right now, we have the reevaluations out, so we know, but eventually they're gonna catch it typically when it transfers. I'm sorry, when the reappraisal year comes in a couple of years in Cuyahoga. The reappraisal year could be this year in Geauga or whatever. All the different counties have different locations. So I would want to know that first. And then I would tell that client, as long as that triangle falls within 2 years, I can cap it at what their purchase price is. So I can say it's a max of what I say, 250. So the difference between the 175 and the 250 is $75,000. 3%, Marty, of 75,000 is
2250.
2250. Thank you, calculator. And so it'd be about 2250 a year as a max number in 2 years, which is an equivalent of, they don't care about a year. What do they care about? A month. So it's $178.23 per month. I made that number up, something like that. $108.
Close.
I just tried to sound smart like Marty. Great question. Any other questions? All right, well, go call your clients, and I promise you my next session will be a little bit more
Great class.
uplifting and fun.